Good evening, ladies and gentlemen. On behalf of HSBC Mutual Fund, I welcome you all to this very exclusive and a very insightful session on consumption as a theme in India. I think it's been a very interesting 1 month or so because obviously of the fact that there are international developments happening as we speak. There are interesting developments and opportunities getting opened up, and the entire world order is changing, especially when it comes to trade and commerce. But I think today, the agenda for our partners, our distributors, is a little bit more inward looking. We are talking more about the India consumption story because that's something which is the pillar of our economy. I know 65% of our GDP is dependent on consumption. And we thought that if we can cut through all the noise which is going on the external front with trade and tariff and barriers and restrictions happening everywhere else, let's revisit and reinvent the India story and the India domestic consumption story and share some very interesting insights with our partners on this call. We've been doing this now for a long time, and we always get good feedback and very encouraging feedback from our partners. It's because of you and your suggestions that we are able to come up with new topics, with new experts and panelists on our session. So today is one more session with a very, very experienced investment professional from the house of HSBC Mutual Fund. So before we begin talking about consumption and the domestic India story, let me introduce the speaker for today. So we have Anish Goenka. Anish is the fund manager for HSBC Mutual Fund. Anish is also the lead equity analyst for consumer staples, discretionary, and retail sectors at HSBC Asset Management India. He is managing the HSBC Consumption Fund, which is why we've got the person who knows a little bit more than all of us about consumption as a theme. Anish has more than 13 years of experience in the mutual fund industry. Prior to the merger between HSBC Mutual Fund and L&T Asset Management, he was with L&T Investment Management for almost 2 years. And before that, Anish was with IFL Asset Management for almost 9 years with similar roles and responsibilities. On the educational side, Anish has completed his postgraduate diploma in management in finance from Institute of Management Technology, Ghaziabad, in the year 2012. So welcome, Anish. It's a pleasure to have you with us on this call.
Right. Thank you,
Yes,
Rajat. I hope
yes,
I'm audible and you can hear me clearly.
yes, you're audible.
Right.
And Anish, just to make you acquainted, we have all our esteemed partners, our distributors, our intermediaries on this call today. Everybody is quite eager to hear about your views on consumption. But let me, before I start asking questions, and we have received a lot of questions, before when people got to know that you are coming and you'll be talking about consumption. But I thought before we start targeting those consumption related questions to you, it would be very, very useful for our partners to get a market wrap from you. If you can just kind of summarize the developments that have happened in the last few weeks and the last few months in India, both from an external and internal perspective, and how do you see the market situation currently?
Yeah. Thank you, Rajat, for that, and thank you all for joining. It's always good to connect with everyone. I'll maybe start with on a lighter note. After your last day, the global macro. But on a serious note, I think nobody knows what's going to happen, and I think there's no point guessing where the tariffs eventually will settle at. But we've seen that in April. I think initially the threats were very high, and eventually the deals were happening at a much lower level. So I think the same should happen again here. We have 3 weeks to negotiate and get a deal out of it. And then India is actually doing the right thing with not getting bullied and standing on their part. So that's very good to know. And then I think if I just look, if I keep this event aside for one moment and then talk about India and how where India stands at the global level. So I think if you see the top two economies in the world, US and China, actually they are going through their own turbulent times, and the economy will be volatile and will not be very easy to invest in. So, for example, US with all these tariffs we are talking about, we have seen that in the last time also, eventually all these tariffs were borne by US consumers itself, and this will hurt the US economy very badly. Plus, if you see the US government debt, which is very high, and that doesn't look like have a short-term solution there. plus the dollar weakening was always a risk in the slightly longer term there. So US economy will have the volatile times in the next couple of years, 3 years. And then Trump being Trump, the policies that he have, the uncertainties that he brings in will only create more problems than solutions. So US market will be volatile and not very easy to invest in the next couple of years. And if you look at China also, now, China have their own problems. They are going to a deflationary phase. The housing prices are coming off, and there are so many unknown variables that are there. That China, anyway, it's very difficult to invest for in China for a longer term perspective. So from that standpoint, actually, India stands out. And if India can actually figure out and solve the growth part and then get growth back, I think India, from a global standpoint, actually looks very good. And the government, if you see, after last year's elections, there were already signs of slowdown, and you've seen that so many bureaucracy changes that happened, and it only got deteriorated in September, October. But government realized that and very quickly have worked very well. So if you see last 6, 8 months, what we have seen, current account fiscal very well controlled now. If you see liquidity surplus has been created, which will only get accelerated in September, October. Then if you see inflation coming off, that is also good, and interest is also on our side. So from overall point of view, India macro actually looks very solid. It's only the micro where the things need to improve, and there's a challenging growth phase. On the ground reality, consumer sentiments are not that great. So that is the micro part which needs to be improved. But even in that, I think from what we interact with companies and some of the government also, what we are seeing that September onwards is where we see that the growth should start picking up. Now, why would that happen? Because firstly, last year, September or August is where the growth started to deteriorate. I think so the base is also favorable there. Then if you see the festive also is this time much earlier, and we should start seeing some pickup itself in August, September, probably there. And then if you see all the government actions, which generally take 6 to 8 month time to start flowing into demand, I think that also should start pointing out towards September, October number. So all in all, we believe that the growth should start picking up in October, September, October there. And from an earnings point of view, also last 12 months or 4 quarters, we have seen that earnings downgrade is happening every quarter there. But this should be the last Q1 should be the last quarter where minor downgrades will happen, and we are entering into a more stable phase of earnings from Q2 itself. And if that growth sustains and from in Q3, Q4, I think that should also solve for the valuations of our market. So overall, from a 2 year, 3 year medium perspective, I think we remain fairly bullish on India. And now consumption being 60% of GDP remain a significant part of GDP. So if India has to grow double digits, then consumption, of course, has to contribute a significant part of that. And hence, we remain fairly bullish on India consumption as well. So that's how I'll put it in the summary.
Thanks, Anish. But thank you, and it's a nice encapsulation of what has happened in the past. A lot of interesting insights when you mentioned about the results, and you are fairly optimistic that probably this is the last quarter where you will see a drag in earnings, and probably you will now see better results coming in, both from a valuation as well as from an earnings perspective. So that's heartening to know, Anish. Now, before we start shooting questions at you around the fund that you manage and consumption as a theme, it's a humble request to all our partners who have joined in. Please be very, very interactive in this. Please, we want to engage with you. So there is a Q&A tab. Everybody is on Zoom. Please do put in your questions there. I will try my level best. After I have asked certain very important questions, I'll try my level best to kind of summarize your questions, and keeping time in mind, try to ask all those questions to Anish. Yeah. So please keep your questions coming in. Anish, I think you're trying to share your presentation, so I'll give you a second. Yeah. So you can share your presentation in the meanwhile.
I hope you can see the screen there.
No, I can see the screen. Yeah. Now the presentation is coming, and you can do a full screen for all of us.
Yeah.
I can see it now. Perfect. Okay. So please, once again, a reminder, please keep your questions coming in the Q&A tab. After I'm done with some basic questions which I had received from you and some other sources, we will ask your questions to Anish. Yeah. Okay. So let's start. Anish, the first question which I wanted to ask you is, you did mention in the beginning that things have changed in August, September. Government has done a lot. There are changes in the bureaucracy. There are changes in cabinet allocation, portfolio management, etc., etc. So broadly speaking, if you just stick to the consumption theme, like you said, 60% of our GDP is dependent on consumption. What are those critical big boosts that have happened for the consumption theme in India in the last 6 to 9 months?
Yes. So I hope you can see the screen there. So I think the most important part of the slide is actually what has happened in the government point of view. So clearly there's a stance change from a government point of view. So if you see last 10 years or the decade, we have seen more heard mostly about capex and all those things. But this time, this is the first time that you've seen the government actually putting money directly in the hands of the consumers, which has not happened in the last decade. I think the more and more positive actions will come in the next 4 or 5 years till the next election, that more and more money will be getting in the hands of consumer. And that is a clear stance change that we have seen over the last 6, 8 months here. So for starting with, I think income tax relief, in budget we saw that 1 lakh crore of income tax relief that we saw that was the first one there. Then cash transfer schemes of women has been there for some state elections, and then to that is amounting 2 lakh crore. I think that is increasing after every election, so this could even go higher. So that is again given directly to the women. And I think in the 12 to 18 months, again, we'll see that another 4 to 5 lakh crores of money coming in directly in the hands of the consumer. So around, if you add all this together, 7.5 lakh crore or 2% of GDP, that is a big amount coming in there. And in the past history, we have seen that whenever consumer actually gets this money in their hands, especially when they have the higher disposable income, we see that it's only a matter of time they start spending money and then the consumption goods starts to pick up. So it's clear that the government is changing their stance and then the money is there in the hands of the consumer. Not only this, I think if you add RBI's efforts of rate cuts as well as inflation coming off, so the debt burden is also lower there. Then we have heard media talking about GST rationalization of certain categories there. So that will again boost in terms of consumption of those categories. Then even states are also doing their bit. For example, Maharashtra announced a power tariff cut there. I think Bihar announced free electricity for certain amount every month there. So I think more and more positive actions are moving towards the consumer, it's clearly pro growth and pro consumption from the government standpoint. So I think in the next many years and the next 4 years, especially till the next election, we'll see more and more actions from government, and this will only boost consumption. And I think we are entering into a good phase of 3, 4 years of good consumption growth, both by government point of view and I think from spending point of view, which I'll touch upon later as well. I think both will come together, and I think we are in a good phase of next 3, 4 years of consumption growth. So yeah, so that's I think I will put it that way.
Yeah, I think these are some very interesting and very encouraging numbers for us. I think 7.5 lakh crore, 2% of GDP. That's not a number, Anish, we have seen in the recent past. I think it's a big, big injection boost from the government. And although we were aware, and I'm talking about myself, completely aware of the tax relief for people who are earning up to 12 lakh rupees, which came in the budget. We were okay. I mean, this number was not very clear, but now that you've highlighted the eighth pay commission, that's a big sum of money. But yeah, if you now combine with this with all the subsidy schemes which have been rolled out by the states, by the center for women and other groups, I think it's a fabulous number. So I'm sure a lot of this money, a lot of this liquidity will find its way towards consumer goods, towards services, towards FMCG and many other aspects of consumption. Very encouraging to know. If I just extend this discussion to two variables of consumption, and those
Mhm.
two variables of consumption are, and we keep talking about whether rural consumption is doing well or urban consumption is doing well. There's always been a kind of a rift between them, right? So there are times when rural does well, you have good monsoons and stuff. There are times when urban does well, when there is wage inflation and people have more money in their hands. So what is your outlook on the contribution to consumption by rural and urban counterparts? Love to hear your views on that, Anish.
Yeah. So if you dissect, I think the FMCG growth of the industry is around at 6 to 8% for the last 2 years or so. But if you dissect that into urban and rural, so what has happened in FY 23-24, we have seen a very fairly good growth on the urban side, and then they were actually growing double digits and 5 to 6 percentage points higher than rural economy. But what happened in the last Q4 FY 24, the last end of fiscal year, we started showing some normalization, and from Q1 FY 25 to the last 4 quarters, we have seen that urban growth has actually normalized to a certain level. This was expected in some levels because they had done really well in the last 2 years before that, so it was expected that way. Rural, on the other hand, what happened in FY23, there was very high inflation. And generally, whenever there's high inflation, the volume starts to coming off. So if you see FY24, there was average volume growth there, despite distribution expansion, everything going in the way. But there was very high inflation, which affected the rural growth there. But in FY25, towards the end of FY24 and starting of FY25, you've seen that very good pickup happening over. And then actually the image reversed. If you see, the rural was going undergoing 5-6% below that, but now they are going much faster, 5-6 percentage point higher than the urban there. But now I think what happened is both of them actually have not fired together for the last 2 years. And I think, but this year where is the year where I think both should start getting converged, and we should see a more steady growth from both urban and rural. Why? Because income tax and all is more targeted towards urban, which we talked about. In fact, Unilever on the call also mentioned that they are seeing signs of urban mass market recovery in Q1 itself. TVS Motors talked about how they are seeing sequential recovery in the urban volume growth there. So there are already early signs that we are seeing that urban growth from 1 to 2% is now picking up there. And all the other companies, if I mention on the FMCG side, already talking about rural still being resilient and growing at a very healthy pace even now. So I think both should start converging and both should see a much better recovery in terms of overall growth. That's why I was saying that from September onwards, I think we should see a full recovery. And now this time, I think in FY26, both of them actually will start contributing on the same page. So this is, I think, the near-term outlook on both urban and rural.
Yeah, I think this is the precise information which a lot of our partners keep looking for, and you've explained it very nicely in the form of two line graphs. Just one observation here, Anish, and I may be talking out of syllabus here, but if you look at if you look at Q3 and Q4 of 2025, the rural consumption has kind of stayed its path. It's not fallen too much in Q4, but there has been a sharp dip in the urban consumption. Now, this has all happened before the budget, right? So I'm talking about January, February, March of
Right.
2025. Are
Right.
you familiar with some kind of numbers which have come up for the first quarter of 2026, which can give us some encouragement on the urban side?
Right. So we don't have the exact data. This is Nielsen data, so we'll get on more.
Yeah,
But what I can say is that all the companies that have reported so far in
yeah,
Q1, we've seen that some pickup there. So all the companies are reporting around that 3 to 5% sort of a range of a
sure.
volume growth that is there. And I think that, like I said, already people are talking about some improvement there. So I think they should go back towards that urban 4% sort of a number. I think is
Okay.
where they should end up in Q1. And I think then it should go an upward curve and touch towards more rural number, which is closer to 7-8% is what we expect it to be. So I think that is a pickup which has happened in the last 3 months. Exact data, I'll get back to you for that. But I think,
Absolutely. No,
but this
this
is
is
what we.
important because I remember some of the other fund managers also, which we keep interviewing and getting across to our partners through these forums, had mentioned earlier that there will be a lag effect. So don't
Right.
expect that 7.5 lakh crore to immediately reflect into the urban and rural consumption. And I'm hoping that these couple of quarters will give us those results. Yeah.
True, true,
Okay.
absolutely. Right.
Thank you, thank you. Moving on, we've discussed, we've kind of sliced and diced consumption from a
Mm.
rural and a urban lens perspective. Uh, I think there has always been some kind of a perception or a preconceived notion that consumption is about the big guys.
Mm,
It's
mm.
always the large companies, it's always the mega caps. I don't want
Right.
to name stocks on this platform, but generally that's
Right.
been the consumption that's been the perception about consumption. Are we seeing a trend where the small and mid-sized companies now, the small caps, the mid caps, be it market capitalization, be it volumes and size of the business, are those kind of companies now actually spearheading consumption in India?
Absolutely. So I think 2 points I'll mention that we keep hearing about slowdown and how things are not great. So that is true. That is some part of it actually is true. But if I break this down, same growth which I was talking about, 6 to 8% industry growth. If I break this down into a different version of the growth, so if you see large caps are actually large companies now. Large definition of large companies is more than 5,000 crore revenue. So if you take all the companies that is listed in the FMCG space, most of them actually more than 5,000 crores of revenue. So if that space has been growing at 3 to 6% sort of a range there. But if I look at the mid size and the small size, which is the range of 1,000 to 5,000 and below that as well, they have been growing at mid teens, low teens sort of a range. So this clearly shows that the media also talks about more about the large listed companies because they matter more. But what we have seen, and this is not a new trend, we have seen this in the past, and there is no reason to not believe that this should continue in future as well. That the growth rates is almost 2x to 3x of large caps, large companies for the mid and the small size. This is again because the distribution is low, the brand extensions are there, they can get into adjacencies, new products are more there, innovation is also there. So clearly, we've seen that in the last many years, and this is again a good snapshot to show that how even the growth, if normalizes, some companies are there, the pockets are always there, which are growing much faster there. So this is one way to look at it. And if I push this forward and put it to different categories also, for example, if I compare FMCG itself as a basket to more discretionary space, and if you see the results are even drastic, the growth rates are even drastic for them. So FMCG again that 7-8% sort of a growth rate, but if you see all the other discretionary sectors are actually growing at 15 to 25% there. And I think if I take the urban slowdown that we commonly hear about, if I take quick commerce, the quick commerce 80% of revenue is top 8 cities only. And now they're doing close to 70,000 crores of GMV. So it's not a small number also. So even there they are growing at 120%, 130% sort of a number there. So one thing which I wanted to point out, that sometimes we keep hearing about the growth being slowed down, but there are always pockets which are growing much faster. And actually the change is happening more on the consumer wallet. And that is also a big part which we'll keep talking about it. But that is one big change which is happening there. So simple examples, I can just give it. Any D2C brand that you buy, beauty or a footwear online, a large listed company actually does not make any revenue out of that. They actually lose out. Similarly, if you order anything on the food delivery, something else is not cooked at home, and you buy an OTT version or any other subscription there, you actually consuming something else and not consuming and letting go of something else. So the point of this is the consumer wallet is changing, and this is the first and the last 2 years that we have seen this sort of a stark difference of growth rates are coming in, and I think this should continue in the many years to come as well. So I think slowdown is there. There are pockets where growth is not there, but there are always pockets we have to find where the growth is also coming. So I think these two are the points which I want to show, and keep this in mind, that when we talk about slowdown and other growth, these two things I think people should keep in mind as well.
Yeah, and as you rightly said, two things. One, it's a balancing act. So somebody's gain is the other person's loss.
Mm.
Like you explained very nicely about OTT and movie halls. And I think the one takeaway for me is the number in QCOM. This is fascinating, Anish. I never knew that this is such a rapidly growing industry. And then look at the kind of numbers. And if you want to differentiate and compare this with the traditional businesses, there's no comparison.
Absolutely,
Yeah.
absolutely, absolutely.
Amazing, amazing. This is very interesting. Okay, so you've already given us some kind of a
Mm.
deep insight into segments of consumption, what is doing well. And there were some questions which I was reading while you were talking from our partners. And I think one of those questions is addressed. People wanted to know which segment of consumption is growing faster. Is it FMCG? Is it luxury? Is it, so I think partly you've answered that. So I not ask that question from the partner who's written. But one, if I can just take a step back, Anish, and
Mhm.
now that you've dissected data for us, the macro story in India, there are a
Mm.
lot of factors, right? So we keep talking about the economy growing at 6.5%. We keep talking about per capita income levels growing. So
Right.
can you share with us a larger picture once, which will give us that comfort that consumption was, and will be on the right track?
Absolutely. I think sometimes we focus too much on the short term and the near term, and I think we keep forgetting the bigger picture
Yeah.
overall. And then this is what you wanted to talk about also. So consumption is a significant, the most important part of India's GDP, and it has been there 55 to 65% sort of a broad range, and still the highest contributor. So currently it is close to 60, 61%. And I think there's no reason to believe India in many decades, not even years, many decades will continue to be the most important part of our GDP. So I think that is one clear message out there. Second, the sheer size of the consumption basket that we're talking about. It was 1 trillion, I think, a decade back, close to 2.5 trillion today. And in future, it should be closer to 4 to 5 trillion. So that sheer size of the number itself, if you think of it, our GDP 10 years back was not even 2 trillion. So that sort of that opportunity is today sitting us right in front of our eyes. So consumption overall remains an incredibly large opportunity. Sometimes we keep forgetting that. I think this is a good sign to prove that the opportunity is so large. I think there are so many things to cover in terms of spaces as well. But this shows that we can grow to a very large number, and the companies that we are in, that they can grow for a longer runway of growth is also there. So that is one part of it. And second, if I touch upon this per capita, which you mentioned about, so if you see, this is again a 50, 60-year chart where we wanted to show that what happened over decades and how this has panned out. So if you
Yes.
see the first 5x, where the India's economy was at a very small level and did not have very open globalization and other things, the first 5x took actually 40 years or so. But after that, when we started opening up and things started to pick up and IT also evolved, many things other also came in. The next 5x actually happened just in 20 years. And don't forget, there was a COVID year in between as well. So, and then I think the next 5x, it's anyone's guesses, but I think it should happen in much quicker time that we have seen in the last 5x. So this again shows 1 year here or there will actually not make a difference. And I think the path that we are on the right trajectory, that is more important. And when we actually reach that 2,000, 2,500, now we have seen that in many countries. So, for example, US in 50s, 60s, Germany in 60s, 70s, Japan in 70s, 80s, Korea 90s, China in 2000s. We've seen that whenever that happens, that upward trajectory when starts happening, there's a lot of things that change from a consumption basket point of view. And I think that exactly where we are at inflection point where discretionary consumption will take a significant boost. And I think this trend we are already talking about, we're already seeing that early signs are already there. And I think we should keep this mind again, the next 5x, the journey of next 5x will be more on the discretionary side, but it's always on the right trajectory. So I think these two points which I wanted to talk about on the big picture numbers there.
No, absolutely. I think it's a magnificent picture, and you've not gone all over the place. You've focused on very two key determinants. One is the contribution of consumption as a theme to GDP, and the other is the rising per capita. And this is my favorite because you mentioned all the way from the 50s,
Yeah,
from post-World War
right,
US. Where US started hitting a certain level, a certain inflection point, and then as recent as the early 2000s when China hit 2000, and I've seen this myself. I've analyzed this, Anish, that whenever you hit $2,000, a sudden burst, a spurt happens. Okay.
right.
Now, whether it's numerology or whether it's actually the power of getting $2,000 into every household, this is phenomenal. And the comparison with China, US, many other emerging markets, I think is very apt. In fact, very anecdotal, but we launched your fund, the HSBC
Mhm.
Consumption Fund, I think 15 or 18 months ago. It's still not completed 2 years, Anish. And I
Right.
remember seeing this graph, and the
Mhm.
number was 21 or 22 hundred
Correct,
dollars for
correct.
India. So
It's
just in
already,
about less than 2 years, we've anyway
mhm.
seen a 10-15% jump in per
Yeah,
capita. Yeah.
absolutely. Good
So very
precaution.
interesting. Okay,
Right.
now that we've talked about numbers and graphs, a lot of the partners would probably be feeling that this is more of a statistical class and an
Mhm.
economics class. It's not. Let us shift our discussion, Anish, to
Yeah,
consumer behavior. Yeah.
right.
So consumers are evolving. We keep talking about Gen Z, millennials. We talk about demographics. We talk about tier three and tier four city consumers now becoming aspirational. There's no difference in the buying behavior between a tier one and a tier two city today. So consumption behavior, the consumer behavior is changing. How do
Right.
you see that shift happening? What are people buying today? Where is the consumption wallet being spent today?
Right, right. Yeah, so this is an important part, I think, where we have focused our fund also. And I
Okay.
think we can see from our daily lives as well how we are consuming, how our peers, our
Yeah.
neighbors, or friends are consuming there. I think again, just bringing that point that initially when the growth was not there from 60 to 2000, what we have seen is that the discretionary consumption growth rates were normal to the overall consumption there, slightly better than the necessary consumption. But after 2000, if you see, there's again a stark difference which started happening, and we're already seeing that it's almost more than one third of total consumption is now discretionary consumption. And I think in the next 15 years or so, we should actually be touching the discretionary would actually be equal to the necessary consumption. So half of our total consumption will actually shift to discretionary consumption. So that is the broad picture of it. Now, if I break this down into household spends, this is again a government data. They've
Mm.
done surveys of 3 lakh households, and that is how the data has come up. In this also, you can see clearly the growth rates have been happening only on the discretionary side. So, for example, if you take consumer services, which includes your internet services, your travel, airlines, your consumer tech services, which has come in, that has grown significantly much higher than any other segment overall. If you
Sure.
see package F&B, again, stark difference. People have started working more. They have less time to cook. That shift is already happening. Organized, unorganized to organized. We keep talking about that. That is the number that we can see. Durables, AC, mobile, that has taken off in the last decade or so, clearly. And now, can you actually call mobile a discretionary thing? It's not a discretionary thing. It's actually a normal necessary consumption in every sense of it. So, and similarly, if people are upgrading a lifestyle in every sense, so be it rent, you start with 1 BHK, then 2 to 3 BHK, I think education, medical, all. So the point of all this is that household spends are clearly shifting towards discretionary consumption, even when the money actually has not been there transferred to everyone. So we are still at that 2,500. When this reaches to the next 10,000, 12,000 sort of a number there, this number will actually accelerate from here and would be a starker difference from what we have seen in the 2000 numbers. So I think this will only get better. And wallet share, which I was talking about, and keep giving examples of that, the wallet share will keep moving towards discretionary at every year. And this is
Mm.
just one sign of it, one point which I wanted to talk about. That I think everyone can relate to it in every sense. So I think these are numbers where it shows also.
That's right, Anish. And I
Mm,
think we also probably talk a lot about the premiumization which is happening. So not
mm,
only is it only FMCG or basic necessities, it's like the Maslow's hierarchy of needs, right? You're done with your roti, kapda, makan, and then you move to higher spends. But within discretionary also, we are seeing a premiumization wave, right? So people they're not happy with an entry level model of a car. They want the higher model. They're not happy with the basic feature phone. Everybody wants the latest Android, whatever, is there in the market. So I think that is also a very interesting trend, Anish.
mm.
Do you tend to agree with this?
Absolutely, absolutely. In fact, we have been talking about how penetration, this premiumization, unorganized to organized, all this digitization, convenience, all are playing out like the same level, same together. And then there are
Mm.
different parts of categories which are going through different forms of, for example, we have seen premiumization in many categories, be it from biscuits to cars to anything and everything. So people are upgrading even at every point whenever they get a chance, they'll upgrade their lifestyle and make it more
That's
premium.
right.
That is exactly what we're seeing. And not even from even high ticket size like rent also or houses also. I think we have seen 1 crore plus houses being the fastest growing segment in the real estate as
That's
well.
right.
So,
That's
so
right.
from biscuits to real estate, that is how the premiumization is
Yeah.
working.
No, absolutely. And this is startling. And I'm sure you, as a investment team professional, fund manager, are also trying to capitalize that this change and this shift which is happening in your portfolio.
Right.
Coming back to investments, I think we've
Mm,
done a lot of
right.
economy study. We've done a lot of insight and X-ray into the consumer behavior today and what kind of themes are doing well in consumption. Let's
Mm,
talk about the investable universe of consumption, Anish. What
right.
does the universe look like? From your perspective, from a fund manager's perspective in
Yeah.
India?
Yeah. So in the last 2 years, we have been trying to educate everyone, and this chart has, I think, maybe you would have seen by many people as well.
Yeah.
But the point I keep trying to make that the consumer space is far bigger and broader than it was before 10 years, and then
Hmm.
this is a clear picture that we show that many discretionary categories and companies have come up in the last decade, and then they have grown far ahead of the core traditional FMCG that we call about, and they have grown much faster, and the profit pool also of these companies is much larger. So earlier, whenever I used to think about consumer sector, the names which used to come in Unilever and all those companies there.
Yes.
But today, if you think about it, we actually do think about very different companies. So for example, and the good part is that these companies actually are now much more profitable and investable from our point of view as well. I'll give you examples of QSR. Now, Domino's was the only company which was profitable 10 years ago. Today, we have 5 listed companies plus 2 food delivery apps, all listed companies, profitable and investable. If you take a parallel as an example there was only hardly one company which was investable 10 years ago. Today we have 10 companies, including some niche companies as well. So the point is, and same patterns can be seen across your real estate, hotels, jewelry, hospitals, etc. And the good part is after COVID, we have put all the companies which have come from IPOs in the last 5 years, those sectors there. If you see the categories that have emerged, e-commerce as a space with consumer tech, auto tech, medical tech, insurance. So many new spaces have come just in the e-com space, and all are profitable today. Electronics, medical, luxury retail, travel has become such a big theme. Even if I don't include airlines and hotels, then also have so many options to choose from. EMS has become so big. Co-working is now coming up as a space. So the point of all this is the consumer space is much bigger and broader, And then these companies are actually not small enough today as well. If you see the market cap also, in fact, many people ask us about these companies or these categories will be very small and niche in nature, but actually that is not true. So if you add all this together, this number is actually very, very large. And then just if I go category wise as well, jewelry, if you take an example of 6 lakh crore plus market, the biggest player is actually only 7% market share. Apparel, 5.5 lakh crore market size, biggest player, largest player, 3% market share. So this shows the kind of opportunity that we have in front of ourselves for the next decade, because these companies actually were only state specific, region specific. Now actually they're getting into pan India and then capturing that consumer. I'll give you some interesting examples also. So from we were actually in Raipur, and then doing a store visit channel checks that we do every month or so. We met the KFC store manager, and he was telling us that he opened the store 2 years back itself. This is in Raipur, and this Raipur store is actually doing the same amount of revenue per store what a Mumbai store is doing.
Wow.
So now Raipur being 50th in terms of GDP, etc.,
Yeah.
the aspiration levels, the awareness of the brand, the consumer and wanting these brands is so much there that they are actually spending in the same amount of money that a metro would actually do. Another example, Nykaa, for example, if you take of it, 60% revenue coming from tier 2, tier 3
Yeah.
cities. If you
Absolutely.
take an electronic retailer in Bihar, they were telling us the 55-inch TV is actually one of the highest selling SKUs for them. And just imagine in Bihar, 55-inch TV, who would buy? But earlier it was not available, and it was not available at EMI. The people think in EMIs now. So this has opened up so many categories and opportunities. And because of social media, the awareness of the brand and the aspiration levels are so high that we see that consumers wanting these brands everywhere. And this is exactly what we want to capture this in the fund itself also. And just on when we think about, which you asked about, how many companies are there in the investable universe
Yeah.
also. I think this is a clear, people generally think that this is a thematic and a very small number of companies are available. But if I just take a threshold of 2000 crore market cap, which is very high, uh, if you take, then also we have more than 500 companies to choose from, just about in the consumption space also. And the good part is that these companies actually sit in mostly in the mid cap and the small cap space, which exactly I was talking about, that there's so many companies which are there, which have the opportunity and the growth rates, which can the growth runway of 10 years or so, that actually is there. And just to give examples also, people talk about the likes of Titan and DMart and all, where the market caps have been created for. So if you see Titan 10 ago actually was only 22,000 crore market cap. Today
Yeah.
it's 3 lakh crore. If you take about
Absolutely.
DMart listed at 30,000 crores, 2.5 lakh crores. So this shows the kind of opportunity that we have ourselves in hand. And just last point on this is that one thing we firmly believe is how the index will change over time. I think if you go back to US again and see that 2000s early sort of index and the index that we have today in terms of S&P, there's a stark difference, and we believe more and more consumer names will come into the large caps and the mid caps over time, and the index itself will look very drastically different over next 10 years what we have right now. So this is how I'll put it in terms of opportunity size and then the number of companies available that is available to us as well.
Yeah, and just to clarify, you're talking about consumer financial services. You're talking about the financial part, the lending part, the NBFCs who are enabling consumption, right?
Exactly. So in terms of savings, also we've seen that there's a stark difference right now. Earlier, the savings were done mostly in the bank side. The key people
Yeah.
used to do FD and deposits and all. But now I think I'll touch upon that also. But now I think we've seen that the consumers actually getting into, first of all, the credit card itself is a big theme there. People
Yeah.
there. If in
Yeah.
terms of spending, that is there. Saving point of view, people are investing more. So I'll give you 70% of investors in today is actually less than 40 years of age. So they are starting early. The savings pattern is also very different.
Okay.
And again, if you think about, people do not put money in the banks, they want to put it either in the stock market, or they actually have EMIs. They want to put in liquid funds or something or the other, or they directly investing from their point of view. So this, and that is exactly what we capture from either from an asset management point of view or insurance point of
So
view.
financial services as consumption, the financialization of savings, which is happening. So even an SIP, which a consumer is doing today, is a part of consumption. I
Absolutely.
appreciate that. I
Absolutely.
appreciate that. Yeah, very interesting. Okay, I think we have just one or two questions left, and then we'll go to the audience to take questions. So, Anish, tell me, and this has been I think, talk of the town, if I can put it this way, in the last maybe few years. Indian consumption has been benefiting from three broad catalysts. One of those catalysts is, and you just touched upon that, is the demographic dividend, right? So, maximum number of people less than 30 years of age, India. Okay, that's one. Next catalyst, which I can think of, is the Gen Z. Yeah.
Mm-hmm.
So this is a Gen Z. This is the aspirational, generation. This is the current generation which has just started working. They want instant gratification. They have technology to their hands, something which we never used to, and everything is available at their beck and call, at the press of a button. Okay, so that's the second catalyst which is happening. The ease of getting consumption goods and services for this generation. And the third generation and the third catalyst, Anish, which I've also seen and people are talking about, that is the increasing participation and contribution of women in the workforce and in the economy in India, because that is something which has been very slow in India. It's been a very lopsided economy when you do a gender divider, but now we are seeing a lot of women contributing to consumption and GDP. What are your views with certain data points and illustrations on these three catalysts per se?
Right. I think these two are the most important drivers of especially discretionary consumption is what I
Okay.
believe.
Yeah.
Initially, it may seem trivial in today's world, but I think hindsight, it'll be very obvious that these two were the very big drivers of discretionary consumption. So just starting off with women, I think women are taking off everywhere. If you think of it, right from becoming CEOs to their store managers, they're actually a factory. Wherever I visited, the 70%, in some cases, 70% of factory are done by women. So clearly that is change. If you think of startups, 18%, 20% of startups are now run directly by women. I was actually surprised to know that alcohol shops in UP, 25% of them actually are women run. So that is a very surprising stark number there. In fact, I want to touch about that. This webinar is also organized by a marketing team which is mostly women. So thank you for that also. But the point of this is that these women are taking over everywhere, and as this happens, the two things which will happen because of that. One is that people will have more money in their
Yeah.
hands to spend. The households will have second earning number there, so you'll have more
Mm.
money to spend of it. Second, I think we've seen that when it starts happening, they will have less time to do other things. So, for example, the packaged foods or the food delivery apps or the e-com space, 70% of them actually used by women.
Sure.
70%. So they are clearly have less time and they will start doing something else. And then all those taboos also. There was one company which spoke that 40% of India luxury goods demand is now coming from women. If you take real estate, now for this is the first time where female actually have buying the houses under their name, not in joint accounts, and they've grown much faster than the male accounts as well.
Yes.
So
Yes.
clearly there's a shift from every
That's
angle.
true.
And be it beauty, apparel, I can give more examples of that. But the point of is that this clearly, and as they start, they're just about 40% today. And as they become 75% of workforce, and then I think this will be a start because every incremental money, again, as I focus on incremental money, that will go more towards discretionary consumption as we have been seeing in the last
Yes.
many years. So this is one women point of view. And
Yeah.
I think the second most important, I think, first of all,
Gen
it's
Z.
very difficult, I think, to understand Gen Z's behavior. It is very difficult to even
Mm.
think of it. But now
Mm.
it's that become too large to ignore. They're close to
Yeah.
40 crore number in total, soon to be 40 to 50% of workforce. And as they start becoming big and big, start earning more and more, I think they will drastically change both I think in terms of spending pattern as well as savings pattern there. And just to start off with, I think what we have seen, like you were saying, luxury, which was in previous generations, luxury definition of be it mobile, car, travel, or your AC and everything. All this is actually the need of this generation. They think this is.
Luxuries have become necessities today for this generation. Absolutely. Absolutely.
And because of social media, those they're so highly active on social media, they keep on experimenting so many things. So this was one line with they actually the brand awareness is all time high. People know about brands in and out, but the loyalty is actually all time low because they will keep trying something or the other, and they can't sit with only one brand. In fact, they will not even use the same brand in many cases what we were using it. So this the shift of clearly change is already there. Then there's so many habits, the instant gratification from their point of view. They want, like I said, they want everything instantly. Quick commerce taken off
That's right.
because they want everything in 10 minutes. You want payments in seconds. You will not even wait for anything. So that sort of a nature is already there. In fact, they will actually create more new ways of consumption which we haven't even thought about. I'll give an example of travel clothing. So we were speaking to a fashion retailer. He was saying they have created one section only for travel clothing. First of all, because travel has picked up, so there's a huge demand of that. But because people are so particular about what they want to put on Instagram,
That's
about
true. That's
what
true.
they wear, so this has created a new demand in itself. So
The
there'll be so
airport
many
look. The airport
airport look.
look.
Absolutely, exactly. So there'll be so many new ways of consumption that will come that we
Yeah.
can't even think of. And if I translate this again, like I was saying, 70% of users, investors are today less than 40 years of age. That is remarkable in if you think of it. And a third of Gen Z is already into stock investing. So they're
Yeah.
already thinking. The early
Absolutely.
generation was
Absolutely.
always risk savvy, but these guys are actually taking risks and want to earn and live their life today itself. So that is why this what I call what you were saying, roti kapda makan will not be good enough for these guys, and then they will look much more than that. And I'll just end on this point on from an investment perspective also. So why these two are important? For example, there was a study done in the US for Fortune 500 companies that even after being a Fortune 500 companies, there are many companies who do not survive and die out, even after having the best talent, people, capital, etc. So the results were that 90% of them actually fail, not because of any competition or anything. It's only because the trend changes and they are not able to adapt to that. Their culture
Catch
cannot
that
adapt
trend.
that
Catch the
and
trend.
catch
Yeah.
that trend
Yeah.
and basically disrupt themselves. So
Yeah.
similarly, when these trends will change, we believe the winners of the last decade will not be the winners of the next decade.
Absolutely.
This, from investment point of view, also we should keep in mind that the new age companies or the new behavior of these will be not be very easy to capture for the legacy traditional brands as well.
Yes, Anish, and just to add to this, I mean, you are the expert, but I was privy to a report. If I'm not wrong, it was from Boston Consulting,
Mhm.
which came in about a couple of quarters ago, and they talked about that in the next few years, Gen Z would contribute to almost $2 to $3 trillion of consumption in India, which is where our GDP was a couple of years back. So just think about it, a
Exactly.
parallel economy being created just because the Gen Z is now consuming. And these are some
Absolutely.
fabulous, eye-opening numbers. Yeah.
Right. Yeah.
All
Absolutely.
right. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.